In this lab at the headquarters of Acer, a Taiwanese consumer electronics company, designers are tasked with creating products that will stand out in what is now a crowded market with much lower profit margins than in the past.
Taiwanese brand, now they really work very hard to make the brand more premium by design.
Acer and its local rival Asus are having to fight to differentiate themselves from a host of Chinese rivals who have used aggressive pricing to gain market share in PCs, these Taiwanese companies' long-standing cash cow, as well as in new areas like mobile phones.
Taiwan's technology sector has been a critical part of the economy for decades. But the rapid growth that it once drove has stalled in recent years. And with China rolling out huge investment plans in a bid to climb the value chain in this industry, the competition is only set to grow.
Of course, I think a lot of Chinese players, they are very aggressive. People say like the wolf, okay? But I think for Taiwanese players, we need to prepare ourselves for this kind of global competition.
For the biggest segment of the Taiwanese tech sector, the semiconductor industry, the implications of Chinese growth are particularly complex. This is well shown by the awkward relationship between ASE and SPIL, two Taiwanese companies that are among the world leaders in semiconductor packaging and testing, the final stage of the manufacturing process. ASE has taken a big minority stake in SPIL in a possible precursor to a merger, arguing that China's growing competitive threat means they need to work together.
It is going to take bigger human talent. It's going to take the capital dollars to create the next level of innovation that is required. So in these two senses, it's much better for Taiwan ecosystem to collaborate and work together.
But SPIL's chairman, Bo Lin, is resisting these overtures, saying that it would make more sense for his company to team up with a Chinese partner to firmly embed itself in the so-called red supply chain.
They want to have their own supply chain to take the benefit of their big market. The most important thing is you need to join with them.
The threats and opportunities presented by China have been vastly increased by the government's industry strategy announced last year, in which it promised semiconductor investment of up to 1 trillion yuan, that's about $156 billion, over the next 5 to 10 years.
There are some companies out there as well, but all in all, if you look at the whole package, I still believe actually there should be a very good partnership opportunity out there between Taiwan and mainland China.
But semiconductor design companies like MediaTek are not currently allowed to receive investment from mainland companies, a law driven by fears about their vital intellectual property leaking away to China. Economy Minister John Deng told the FT that the government will try to lift this ban before its term ends next May, something which would have major implications for this crucial part of the tech sector. Executives at the companies in question are broadly supportive of this proposed change, suggesting that such investment could be part of what is needed to revive economic growth in Taiwan and keep its companies at the technological cutting edge.
At the end, they can do it by themselves. So before they're ready, we better to let them be their members and get the business there. Use their capital, use their market, sometimes use their talent. Then we try to own the business in China.
But some still sound a cautious note.
China represents both a threat and an opportunity. It's an opportunity in terms of China's a huge market. But on the flip side, there is a lot of fear of technology drifting across the straits and Taiwan being hollowed out.
As Taiwan's January presidential election draws nearer, a crushing victory is predicted for Tsai Ing-wen of the Democratic Progressive Party, traditionally more wary of the mainland than the ruling Kuomintang. All eyes are on the possible ramifications for the island's relationship with Beijing, and they will be felt nowhere more strongly than in its crucial electronics industry. Simon Mundy, Financial Times.